Bismillahirrahmanirrahim. Assalamu alaikum viewers. Today I bring for you a very important topic, that is month end and year end closing of accounts. If you are an accountant, believe me, this video is very important for you, as I am pretty sure that neither during your studies nor during your professional career nobody will explain you these things what I am going to teach you right now. Today we are going to discuss what is monthly closing, what is year end closing, and what are the processes involved in month end as well as in year end closing. It is very important to perform monthly closing in every organization as it enables the accountant to generate accurate and consistent financial statements. It helps in early identification of accounting errors rather than at the year end. It also helps the management to review the weak areas of the business and to make a timely decision to achieve targeted profits. This in front of me, one sheet, I have make one schedule for the monthly closing. These are all the things you have to do when you are going to close your month. In step 1, you need to reconcile your cash. Step 2, you need to reconcile the bank. Then you have to generate purchase report on the last day end of the month. Generate sales report on last day end of the month. Generate closing inventory on the last day end of the month. Generate AR aging report on last day end of the month. Okay, this is when you have finished all of your data entries. You need to take all these reports. Okay, why? Because in case if any of your data entry operator it will make any entry in the previous month, you need to locate it. Where is the mistake? Where is the change happen? Okay, so you need to take all of these reports to make sure that if any change will happen, you can trace it out. Then on step 7, notes receivables reconciliation. Notes receivables means any checks you have from the customer, PDC checks, post-dated checks you have with you. So you need to reconcile how much you have and how much it is reflecting in your accounts. And then notes payable reconciliations. What checks you have issued to your suppliers for the future dates, you need to reconcile that. Is it exactly matching with your system or not? Then AR reconciliation, you need to make accounts receivable reconciliation, AP reconciliation, AR versus AP adjustments. What is this? Sometimes we have one customer, we are selling to him and also we are purchasing from the same party. Okay, so on the same time this customer is our supplier and also this customer also we are selling to him. So what we have to do at every month end, like these parties, we need to make adjustments. Okay, it is called exchange adjustments. We need to adjust the account in order to see that what exactly we have receivable from them or we have payable, whatever it is, we need to show in our accounts. Okay, so every month end you need to go, it is 2 parties, 3 parties, 4 parties, you need to go review and you need to adjust everything. And then inventory reconciliation you need to make. Then you need to make cost of sales reconciliation. Then prepaid expense amortization. Whatever you have make prepaid expenses, you need to amortize on monthly basis, regular basis. Okay, not like one expense you are amortizing and the other you forget. Not like this. All of your prepaid expenses you need to amortize. Then accrued expenses, accrued salaries you have accrued other expenses, utilities bills or overtime, anything what belongs to the previous month, you need to close it to that particular month. Then depreciate fixed assets. All the fixed assets you should depreciate, not like some you make it and some you forget. You need to maintain the schedules. Then create provision for staff leave salary and end of service benefits. You need to record all the expenses regarding your staff leave salaries. You will pay at the year end after completing 12 years period and the end of service after completion of the employee contract. But you need to record every month expense of that employee. Okay, you need to create provision from this your profit. Then maintain schedules for prepaid depreciation, leave salaries, end of service, loans, repayments, accrued expenses, everything. You need to maintain the schedules so you can track how it is matching with your accounts or not matching. If there is any mistake, you can trace if you are maintaining the schedules. This I will tell you in the next video, how you can maintain all of these schedules in one sheet, and it is very easy, not complicated. Then step 19, maintain an updated loan repayments as per schedules. Okay, whatever you have loans, you have automobiles on leasing, you have loans from the banks. Okay, you need to update it. You need to record the interest expense every month, and whatever principal amount you are paying back, you need to record it. Then management personal equity, their shares, loans and advance summary. This in your closing report you need to highlight these things. You need to reconcile these things, and also you need to report to the management. When you have completed all of the above tasks, then you need to go and generate your trial balance. After generating trial balance, you have to finalize the balance sheet, income statement and retained earnings summary. Okay, this is all the 22 points checklist. You need to do it every month. If you are doing it, if now you are looking to this 22 points, okay, mostly accountants avoid these things, but this is very good practice for you. If you are practicing on all these points, you will feel very easy. Nobody can point finger on you that your accounts are not accurate when you are doing all this work. So you are 100% sure that I have reconciled everything, I have schedules for everything in my accounts. So you will feel very comfortable if you do it. In start it will take some time, maybe first or second month you will feel it difficult, but then you will be habitual to do all these things and it will be very easy for you. This is regarding the month end closing. Okay, what is the difference between month end and annual closing? In annual closing, other than the other steps what you are doing before, you need to create and update provision for bad debts. If you have any bad debts, what you feel that it is not collectible, then you need to write it off from your profit. You need to create the provision for these bad debts. On second step, do everything what you were doing on the monthly closing, what we have explained in the previous sheet. All of these things you need to do. Okay, then close. After doing all this, close all income, GL expenses and to income summary account. Close opening inventory GL to income summary account. Close ending inventory to income summary account. Close your income summary account to retained earnings, and after that you need to make adjusted trial balance after making all closing entries. Like this you can successfully and accurately you can close your year end. I hope you understand all of these steps and how to do all these things. This we are going to discuss in the next video. Sorry viewers, one thing I forgot to clear you this in front of all these things. Okay, in front of every point I have make the months. Okay, Jan, Feb, March, April, mail like this. Okay, so whatever step you are completing, you need to do it like this. Okay, so this is completed, this is also completed, this is also completed. Like this you can track it. Okay, so whatever the steps completed, you need to make it okay. Okay, so this I make the conditional formatting that whatever I have completed, it should make green color. Okay, so like this you can trace during all this process what step you have completed and what you do not have completed. Okay, so like this you can check everything. Thank you so much for the time. Okay, stay connected to learn more things like this. Thank you so much.